What is up, everybody? Welcome back to the Crypto Sherpa Show. Sorry for being late today. I did tell you yesterday I was going to be on at 3 o'clock, and it's 3:15. Sorry being 15 minutes late, but I had a meeting today at noon. Business stuff going on for the Bitcoin Ben Crypto Clip, so sorry I couldn't be here at noon, but I will be back tomorrow, normal time, 12 o'clock Eastern. But yeah, what's going on with the news today? What's happening? I got a lot of altcoin news for you, as well as Bitcoin utility, a nice little article piece from Bitcoin Magazine that I thought would be worthy of sharing with you. But let's go through the little tidbits of news that's been going on so far. Like right now, Eric Trump has been blasting, like calling Bitcoin $1 million per coin. The floodgates are opening. Like he's been calling it everywhere. Fox Business, CNBC. And so like this new $1 million Bitcoin is becoming so normal to say now. I remember like back when I would like first say it, like just hell, even a couple of years ago, like 2-3 years ago, it's like, yeah, Bitcoin will be $1 million one day. People will be like, oh, you're crazy, especially the speculative ones out there. But they'd be like, go there ever. But now we passed 100,000. People are starting to really realize like, okay, we actually this isn't stopping, it's going to get there. So when we hear like Eric Trump talk about it, Michael Saylor, CZ Binance, Tim Draper, like so many people are calling for the $1 million Bitcoin, that it is going to happen. When? We don't know. I'll say I predict 2032 when that could happen, but again, it's just a prediction, meaning it's not going to happen. But this is the normal, so we're going to start seeing a lot more people call for the $1 million Bitcoin. Other thing else in the news, let's see. King of Bhutan meets Binance CZ to discuss Bitcoin's adoption. Even royalty is taking Bitcoin seriously, and that's true. Everybody's adopting it, so it makes sense that we could reach the $1 million Bitcoin. And Justin, SEC is pushing for allowing stocks to trade on-chain like crypto, with trading to begin quickly this information. It looks like they're making some changes up in the White House area. So yeah, definitely look forward to that. But let's go through this article on the utility of Bitcoin moving value like information. So I thought this was a good article that should be shared with you guys. But being able to transmit value like information as fast as a text message has a profound implication for society that Bitcoin unlocks that. So you'd be forgiven for thinking that technological development was following a predetermined trajectory. In the past few decades, we've seen the rise of personal computers, the internet, mobile devices, and now the advent of Bitcoin. Now, it's already well established that Bitcoin is the best asset. That's just a matter of basic financial literacy. If you can read a graph, the evidence is absolute. Now, here's a chart showcasing, let's see, orange is Bitcoin, gold is light blue, S&P 500 is green, NASDAQ is yellow, the US bonds market is dark blue, and crude oil is that dark orange color. But yeah, as you've seen over the past 10 years, Bitcoin it's just evident. It's obvious that Bitcoin is the better asset. Now, what's less obvious is that Bitcoin's utility and how that is going to recast our economic lives in the coming decades. Now, beyond its properties as an asset, which are getting most of the attention and recognition, Bitcoin is a way to move value. That its core utility, and it's not just about buying coffee or underwear, at least not yet. But since it's currency designed for the internet, retail adoption will likely come after it goes mainstream online. Now, how will this go mainstream online? Is by commoditizing value transfer, letting anyone move value anywhere for any purpose without intermediaries. And that's the beautiful thing about Bitcoin. We don't need those intermediaries anymore. Now, moving value is such a big part of our lives that expanding that realm of possibility means changing our behavior and the shape of our societies. When it comes to moving value, borders will evaporate, colossal institutions like banks will shrivel, and new connections will sprout like blossoms in a spring. The scale of the transformation will rival that of the internet itself. Now, physical books were hard to obtain and easy to ban, and sometimes burn. The internet liberated information, giving far more people access to far more ideas than we ever had before. So conventional money is locked in the walled gardens and preferred pathways of the market incumbents. Now, Bitcoin represents the end of the system and the beginning of another. Now, the internet unlocked information, Bitcoin is unlocking value. So payments is not equal to value transfer. So to grasp this potential of the current transformation and differentiate it from the boilerplate pro-Bitcoin rhetoric, think of it as a shift from the fiat-based payment paradigm to the Bitcoin-based value transfer paradigm. Now, this sounds more abstract than it really is. Now, first, let's recall that the familiar payments of conventional payments are instructions to clear a debt. a definition echoed by professional economists. Now, if someone sells you a coffee, where did that take me down? So someone sells you a coffee or cuts your hair, you owe them, and you settle that debt by paying them. Note that in the practice, now paying them requires instructing intermediaries like banks, apps, or cards, or even middlemen to actually move the value across to them. Now, in contrast, that with value transfer, there are two key differences. First, as we conceptualize it, value transfer is direct. It's not an instruction to an intermediary to perform an action, it's the act itself. Second, value transfer needs not settle a debt. Payment is a quid pro quo. Value transfer is just quid. You can send value at a whim. It doesn't necessarily imply a trade, though, but though it can. Now, cash makes the differences between payments and value transfer readily apparent. When you pay someone in cash, you're not asking permission. You are physically transferring value from one hand to another. And cash can do more than just settle debts, i.e. more than payments. Now, dropping some chains into a busker hat or giving your kid an allowance are simple transfers of value without prior debt. Now, you can push value with cash rather than just trade it. Now, however, cash is being marginalized by authorities and it's poorly suited to our digital world. So we're losing the ability to transfer value. Now, we trust these third parties, so the intermediaries like banks, credit card companies, and fintech providers to honor our payment instructions and fulfill our requests. But payment instructions are often denied or delayed. More importantly, these payment instructions are limited to predefined patterns dictated by the intermediaries, siloed structures from the customer to the merchant, or from the employee to the employee, from one bank account to another. If the bank shares a wire transfer protocol, this might sound like an exaggeration, but consider platforms like Uber, OnlyFans, Airbnb, and Spotify. On the surface, they all look like decentralization. The platform just connects service providers with consumers. But the payment rails that run along the platforms predefine paths, which include long chains of greedy intermediaries, the banks, the fintechs, the apps, the credit card companies, etc. Each of these intermediaries adds cost, a potential point of failure, and a source of permission friction, and regulatory and otherwise. Now, the contrast to value transfer is stark. Simply put, value transfer distills the permissionlessness, its instantaneousness, and flexibility of cash payments without the constraints of having to hold and move physical objects. But how do we reimagine cash in a digital world? Well, how do we move from the limitations of payments to the empowerment of value transfer? Well, if only we had a way to send and receive peer-to-peer electronic cash. Well, Bitcoin is more programmable, more flexible, more adaptable than the digital payments can be. Bitcoin lets us store and move value just as smoothly and easily as our phones store and share a snapshot. Now, by treating value as just another kind of information, Bitcoin will enable new patterns of economic activity built on entire ecosystems of particular use cases, and yes, it must be Bitcoin. Now, only Bitcoin can facilitate this value transfer. So value transfer, moving value at will directly between sender and recipient, represents a momentous shift from the conventional payment paradigm. So why isn't fintech making it happen? Isn't this what stablecoins are for? Why is Bitcoin the necessary foundation for an economic based on value transfer? Well, the short answer is that payments are deeply embedded in the architecture of the fiat system, including fintech. Now, a fintech payment involves an indefinite chain of intermediaries. For each intermediary to earn revenue from the transaction, they need a billing model, and they opt for discrete payments because that is what regulated money transmitters are allowed to do, thanks to the KYC, AML, and the risk assessment involved. It's an expensive business, so their fees are commensurately high. Now, beyond just the cost, intermediation necessarily introduces friction. Each intermediary is subject to regulatory constraints that vary across borders and jurisdictions, which limits their markets and their reach. They must also consider extraneous business concerns, like the risk of large clients in one sector revoking their business because of unrelated transactions in another sector. Moreover, these payments are no more programmable than the intermediaries allow, and they are neither final nor instantaneous. Now, the intermediaries can process them at their leisure, and the payer can often rescind the payment after the fact. Now, stablecoins, often touted as a solution, merely substitute one fiat-based promise for another. As the MICA and the Genius Act show, stablecoins are deeply vulnerable to currency controls. A given stablecoin might work for cross-border payments today, but not next quarter. USDT and 9 other tokens were delisted from European exchanges at the beginning of 2025 in response to the new regulations. So stablecoin issuers are subject to the same extraneous concerns as fintech providers, and they are only as programmable as the central entities allow them to be. Now, stablecoins are just fiat-backed, or they're just fiat beheld through blockchain-colored glasses. So indeed, stablecoins and fintech are digital lipsticks on a legacy payment to the pig. So that's what this photo meant. So yeah, basically stablecoins are just this. But Bitcoin succeeds where fintech and stablecoins fail. So where their costly intermediaries require payments, Bitcoin enables value transfer where their operational constraints limit access and use cases. Bitcoin is open, it's decentralized, it's neutral monetary network that works for anyone, anywhere, anytime. Now, where they attract regulatory scrutiny and become geopolitical pawns, Bitcoin offers a minimal regulatory footprint without a native jurisdiction. So where the limit programmability to protect established patterns and privileges, Bitcoin fosters innovation and the programmability that it requires. Now, if we could go back to the dawn of the internet and design a currency optimized for the digital age, it would look like Bitcoin, and it is Bitcoin. Now, Bitcoin in every app, it will be there eventually. But apps are the vehicles of change. They are the nodes of our constant data streams, and they are the tools that alter how we work, how we move, how we love, and how we think. Apps define the digital environments to which we humans are adapting, and we build apps to adapt our environment to us. Now, value transfer is eclipsing payments, and apps are itself conduits. Now, to understand how apps will integrate and foster value transfer, consider the evolution of the digital camera. The first filmless camera hit the market in the mid-1970s, but for the first 2 decades, they were single-purpose devices. Even the cameras attached to earlier cell phones were just cameras. They took pictures, nothing more. Now, the revolution in what digital cameras can do and in our relationship to them came in 2007 with the release of the first iPhone. It wasn't just the camera itself, but the combination of the camera with apps that changed everything. Developers quickly integrated the camera into their apps, enabling users to take, modify, and share photos. The synergy of digital cameras and apps changed our reality and our behavior. Apps like TikTok, Instagram, Pokemon Go make behaviors that would have seemed deranged 20 years ago. So photographing hamburgers, chasing invisible monsters through the parks. I'm prone to do that. And then choking oneself to the point of blacking out. Like, this is what the cameras have done to the mainstream. But maybe even aspirational, we're constantly capturing our lives and consuming others' lives through the images we see in our apps on our phones. Even Meta's AI glasses are basically just a camera attached to an everything app. Now, what Bitcoin does is commoditize value transfer. It makes it versatile and freely adaptable as a digital camera on a phone was. And any developer working on any kind of app can integrate this value transfer. Messaging apps can let users attach a value to their messages. Social apps can let users raise funds and split bills with the ease of liking a post. Building a marketplace like Uber, Spotify, Airbnb, OnlyFans no longer require millions of dollars in navigating a labyrinth of walled payment gardens, and any dev can do this. So payments require bankers and lawyers, but commoditized value transfers just needs Bitcoin and developers. That's it. Now, Bitcoin is maturing out of adolescence, and specifically, Bitcoin needed Lightning to increase the through point and enhance interoperability. For its part, now Lightning needed to find its place as a common language for Bitcoin-based value transfer. We needed the instantaneous movement, the fraction of a penny to send. But were there a biome of distinct Bitcoin subnetworks include Spark, Arc, Liquid, Fediment, Botanix, and Cashew has arisen, each with unique advantages. Now, SDKs are now available that let developers add value transfers to their apps. And in terms of digital disruption, the convergence of Bitcoin-based value transfers and apps is as inevitable as it was to add a camera to a smartphone. So the technology is here, it's inevitable, it's just as easy as that, and we already know how to do it. Now let's make our descendants wonder how we got by. So payments are the camcorders of our age, and the next technology whose time has passed, the new age that is just beginning, will frequently qualitatively differentiate. Like the momentum, Dorothy steps out of her black and white world in the vibrant colors of the Oz. When value flows as freely as information, the economy changes and society changes with it. Borders matter less, wealth and value flow like the breeze, pun intended, and global interactions across political and class barriers shift from exceptional to ordinary. Now, the components are all in place. Bitcoin is thriving, it's outstripping every other asset. Lightning allows any Bitcoin endpoint to communicate with any other, and protocols now exist to serve a variety of uses and preferences. Developers are discovering SDKs that simplify the integration of Bitcoin-based value transfer into their apps. And they're learning from each other about new ways to apply and leverage value transfers. Now, ways that will make their apps as indispensable as utilities like ChatGPT and Google Maps. We're living at the end of an age that our descendants will regard as primitive, like the age before electricity and running water. We're also living at the beginning of an age that they will consider transformative, like the Renaissance or the birth of the internet. So let's make them proud of all we've accomplished for them and astounded at how we've got by without the tools we built. So Bitcoin's utility is the value transfer. It's like we do not need the middleman to say it's okay to spend this money or to do that. There's no questions if we want to move $200 to $1 million, because with the banks out there, they question everything. What's this for? Where is it going to? How'd you meet that person? There's so many questions. We do not need that. And while they're still doing this, and then eventually if they process a transaction, there's a fee on top of it. So these intermediaries are taking value to transfer that information. And like this article said, first it was like cash, just hand to hand, paying to someone's allowance. Here's $20 for mowing my lawn. Yeah, that was a transfer of value. No one was needed for it. But how do we get that to the internet? It's going to be Bitcoin. It's the only way to stop double spending. You know where it's going, and there's no middleman to it. So I thought this was just a good article to share with you guys, just of the utility behind Bitcoin and how we're moving value like information, and how our next phase is really just Bitcoin and apps. We're able to do it. And once we do that and it hits the mainstream media, then that's when we win. So that's the utility behind Bitcoin. Now let's continue on with the news. What else do I have for you? Well, let's see. It looks like there is no license, no problem. In Wisconsin, this bill aims to ease crypto rules. So lots of changes happening in the space, and it's all for the good. So let's hear about what Wisconsin is doing. So Wisconsin lawmakers have introduced a proposal that could reshape how cryptocurrency businesses are treated under state law. The measure, Assembly Bill 471, aims to exempt a wide range of digital asset activities from money transmitter licensing requirements. The proposal has been referred to the Committee on Financial Institutions and is backed by several Republican legislators. Now, the bill targets mining, staking, and wallet use. So based on reports, the Wisconsin Legislative Reference Bureau outlines clear exemptions for crypto-related work that usually falls into regulatory gray zones. Now, mining, staking, and operating blockchain nodes are among these activities that would not require a money transmitter license. Now, developers creating blockchain software or tools that are also included in these exemptions. And the bill goes further by stating that individuals can keep custody of their own coins, whether through hardware wallets or self-hosted digital wallets, without the state interference. And this is awesome. We do need the rules and regulations in place, because imagine if we didn't put in the rule that it's okay for you to have your own self-custody wallet. Sure, it's very minuscule right now thinking about it, because again, anyone can have a wallet. Nobody knows you have that wallet. But let's just say there was a law out there, a bill that said, no, you cannot use this. It has to be through exchange. If we catch you, well, then there's there's some time in prison, maybe there's a hefty fee to it. So we do need these rules in place. So those just outdated, just unrealistic rules that can get placed. So this is good news that we're having this and what's getting included. But this bill also seeks to prevent local governments from banning the use of digital assets and payments for lawful goods or services, as long as the transaction doesn't involve conversions to US dollars or bank deposits. Now, this distinction matters. While businesses may be free to accept tokens directly, the bill does not cover cases where cryptocurrency is exchanged into legal tender. Now, the boundary keeps traditional regulatory requirements intact for fiat conversions and custodial services tied to the banks. Now, another bill that targets crypto kiosks out there. So while Assembly Bill 471 attempts to carve out freedom for certain digital asset activities, another measure, the Senate Bill 386, pushes into a different direction. Now, SB 386 would require anyone operating a virtual currency kiosk in Wisconsin to obtain a license. Now, these kiosks are often compared to ATMs and allow users to swap cash for cryptocurrency and vice versa. Thus, in a nutshell, two separate paths are being pursued in the state legislature, one expanding the exemptions for miners, developers, and users, and the other providing more regulation to business involved in providing direct fiat to crypto services. Now, this distinction shows what a route policymakers are taking with supporting innovation while still having consumer protection. Now, there are still questions of who would be covered and the actual effect of these changes. Now, the bills that advocate upbeat. So the proponents of the exemption bill are optimistic it will secure Wisconsin's advantage as a center for blockchain developers and firms that are exploring careers in blockchain development, smart contracts, and research, etc., and who want fewer burdensome regulations to work with. Now, by protecting users who merely operate nodes, or they stake coins, or have tokens stored in private wallets, the state would be more friendly to mainstream users too. But there are open questions like federal regulators such as the Securities and Exchange Commission and the Financial Crimes Enforcement Network. They still may claim oversight in the areas that state bill does not touch, but ambiguities in the language such as how conversions to legal tender is defined could spark disputes later on. So that is what's taking place in Wisconsin. We got the Assembly Bill 471 and then the Senate Bill SB 386. So lots of stuff happening in Wisconsin with the states locally going on. So hopefully those bills pass. And this just helps advance blockchain and Bitcoin's adoption around the world. And again, this is just statewide here in the US, but we got news going on all over the place. Like I think this brand in Japan just changed their name to a Bitcoin label because they think they were a struggling business and now they're trying to grasp some other opportunities out there because there's a whole clientele of people who have Bitcoin who want to spend it. But historic kimono brand changes its name to Bitcoin Japan in a rebranding move. So let's hear why this kimono company changed their name. So according to reports, a long-running Japanese kimono and textiles maker will formally rename itself Bitcoin Japan at a shareholders meeting set for November 11th as it begins to hold Bitcoin on its balance sheet. Now, the company also plans to adopt Bitcoin Japan Corporation as its English name and is said it will focus on crypto treasury operations. Now, some of these moves were announced in a company release this week. Now, the company rebrands to signal a new focus. Now, Bakkt's June agreement to buy a controlling stake in the business helped trigger the shift. Now, reports have disclosed that Philip Lord, president of Bakkt International, will take the CEO job at the newly named firm, Ashke Nahida, now co-chief executive officer at Bakkt Holdings, will become chairman of the board. Now, the company stated that the new leadership will better align directors and shareholders and said it aims at a medium to the long-term improvement in corporate value. Now, here is the tweet from Bakkt. Now, Bakkt Holdings has finalized the acquisition of the domain bitcoin.co.jp, strengthening our presence in Japan with a premier web address. Now, the change comes after struggling results. So it kind of sounds similar to MicroStrategy back in 2021 or 2020. It was a struggling company at that time. They took on the Bitcoin adoption strategy, and we all know the rest of that. They're still buying Bitcoin in the biggest company holding, so Bitcoin Holdings. But Marusha Hoda is no startup. They were founded in 1861. It opened one of Japan's first kimono wholesale stores in 1894 and listed on the Tokyo Exchange in 1974. So this is not a brand new company. They've been around for some time. But yet, the company has struggled in recent years. Based on reports, Marusha Hoda logged a net income of minus 407 million yen, or roughly $2.72 million US, for its most recent fiscal period. Now, other textile players have also reported losses. Kitabo recorded a net loss of $785,000 for the FY 2024 year, even as it plans to buy about $5.4 million worth of Bitcoin as it moves into crypto and real-world asset ventures. Now, textile firms have shifted into Bitcoin. A number of Japanese companies in the fashion and textile sectors have announced plans to buy Bitcoin or offer crypto-related services. Reports note that Metaplanet has amassed enough Bitcoin to rank among the top global 5 corporate companies with Bitcoin on its treasury forms. Now, loyalty firm RemixPoint, game maker Gumi, and retailer Anop are other recent examples that have said that they will add Bitcoin to their corporate treasuries. or their corporate strategy. Now, a company reinventing its identity. So this is more than just a name swap. For an organization founded in 1861 to become Bitcoin Japan signals a striking corporate pivot. Whether the plan restores profitability or simply changes to the company's public image remains to be seen, and the market will watch how shareholders react on November 11th and whether other traditional firms follow with larger Bitcoin treasuries as well. So yeah, so they're doing a name change again. They've been around for some time, but this is just showing like corporate businesses, like they've been struggling or seeing some declines. They're looking for other options right now to help save their business, and some are going to rebrand to the Bitcoin name just because, again, that's extra exposure to you. Everyone around the world knows Bitcoin. You try to name your coin XRP Japan, it probably won't get as much views as Bitcoin because, again, there's some people out there who don't know about XRP. There are people who don't know about Bitcoin. But again, like there's more people out there who know about Bitcoin. So just the brand itself just gives you that exposure right there. And then also, yeah, again, their numbers have been declining. They were at 2.7 million in the negative. But again, if they have a success story like Strategy did, they'll do just fine with it. And again, they're just one of a handful of firms we saw make this change. Metaplan was the first one in Japan, which was just a hotel company. And now they're the 5th largest Bitcoin treasury holding companies out there. And now we have a kimono brand textile one. So again, changes are happening in the world. And again, if you want to follow suit, do it. It's not financial advice to say buy Bitcoin right now. Just, again, look what the whole world is doing. They know something that you probably do not, and maybe you should just follow suit. So if you need help acquiring Bitcoin, join the Bitcoin Ben Crypto Club, and we can help you get some Bitcoin. You not want some non-confidential Bitcoin or some confidential Bitcoin, the no KYC part, check out our Bitcoin Ben programs. But yeah, so that's the news on this company switching over. Now, let's see. What other news do I have for you? Let's see. What is this article? Templar launches native Bitcoin lending without intermediaries. So more Bitcoin lending news. But hey, without a KYC process? Let's learn about this. So Templar Protocol has launched its mainnet, introducing the first cipher lending protocol that allows Bitcoin holders to borrow stablecoins against their native Bitcoin without intermediaries or KYC requirements. So I wonder what blockchain they're using for this. So in a significant development for Bitcoin holders, Templar Protocol has announced the launch of its mainnet, introducing the first cipher lending protocol that enables users to borrow US dollar stablecoins against their native Bitcoin without intermediaries. Now, the launch comes at a time when institutional custody solutions are controlling an increasing share of Bitcoin supply, with Coinbase alone holding over 10% of the circulating Bitcoin. The protocol, which has already secured $100 million in lending commitments, combines decentralized multi-party computation network technology with immutable smart contracts to ensure user collateral remains secure and free from the unauthorized. Now, this launch marks a departure from traditional centralized lending platforms and wrap token solutions that have dominated Bitcoin lending. The institutions have arrived and they're hovering up Bitcoin using centralized custody of companies like Coinbase, notes Royal F001, Templar Protocol pseudonymous founder. With Templar, you send your Bitcoin to an immutable smart contract running on a peer-to-peer network, which then sends you the stablecoin. It's that simple. Now, the protocol introduces several key innovations, including permissionless access without KYC requirements, an open source architecture, so with no administration backdoors, and privacy-first design. So at the launch, Templar supports native assets across Bitcoin and other chains. Now, the technical architecture employs a decentralized MPC network for securing Bitcoin deposits, while smart contracts manage the collateralization and repayment processes automatically. Now, this removes the need for traditional custodians while maintaining security and efficiency. Now, Bitcoin was created to replace banks, not to be a novel toy asset for Wall Street to financialize and control, adds Royal F001. Now, the Templar restores Bitcoin to its proper place as a permissionless, censorship-resistant asset in the context of borrowing and lending. Now, while Ethereum's DeFi ecosystem has flourished, Bitcoin lending has remained largely centralized. Templar's solution aims to change this dynamic by providing a decentralized lending option for its Bitcoin holders. Now, the protocol's roadmap includes implementing additional privacy features such as differentiate privacy and zero-knowledge protections against the predatory liquidations. Templar is also... I hate when this does that. Totally lost where I totally was. Bitcoin Magazine, you're terrible with your... let's see, was I right here? This development comes at a crucial time in Bitcoin market as demand for decentralized finance services continue to grow. Templar's approach of enabling native asset lending without wrap bridging could set a new standard for cross-chain DeFi interactions. And the Templar's mainnet is now live and accessible through their website with a documentation that supports available through the official channels. The team emphasizes our commitment to expand the protocol capabilities while maintaining its core principles of permissionless access. I feel like I jumped a big part over there. Or maybe it was around time. But no, so it's actually pretty cool, though. A decentralized Bitcoin lending protocol. Now, have we had experience with this before? I got to do my research on that from back in 2021. So there might have been some lending protocols out there that did have a domino effect, which just curdled down along with the three big banks going down with it. So again, this would just be totally decentralized. Again, it's it is no KYC, but it is not self-custody. So I guess, is it? Because you're basically forfeiting your Bitcoin into the smart contract on their platform, which is peer-to-peer. Again, no middleman's touching it, but it's run by smart contracts. So again, if anything doesn't happen, you don't pay your bill in time, the smart contract activates and sends the Bitcoin off. So I'm curious of how this would work. I definitely want to try it out, but no, it's pretty cool. No KYC, borrow against your Bitcoin, you get a stablecoin back with it. So now what you want to do with that stablecoin, that's up to you. Hopefully it's in a cash flow project, so you're going to have to pay back that loan against the Bitcoins to still keep it. So again, I don't tell you how to do your money. If you want to go blow it on a Lamborghini, go for it. I wouldn't do that. I'd put it into some other cash flow project, another business, another investment, something to increase my cash flow and just my asset control. So yeah, that's what's going on there. And let's take a quick commercial break though, and I will be back with some more crypto news for you. I think next up we're going to talk about Tether buys another 8,000 Bitcoin. Or how much do they buy? They added $1 billion in Bitcoin to their reserves. So that's what we're going to come back to. Let's play this quick ad, and we'll be back with that article.
For years, banks promised innovation. But they gave us fees and friction and fine prints. Today, all that changes. Introducing Private Key Bank from Bitcoin Ben's Crypto Club, the world's first Bitcoin native credit union. Rebuilt from the ground up in the heart of El Salvador, a place where your Bitcoin isn't just stored, it grows. Earn 4% interest paid in Bitcoin. Compounded, secured, and accessible. No middlemen, no hidden games, just your money working for you. Send funds across borders instantly, without SWIFT codes, without currency conversions. Pay anyone, anywhere, with a tap of a finger. This isn't banking as usual. This is freedom, beautifully engineered. The future of finance is finally here.
Yeah, so if you guys want more information about that, give us a call or a text. The number is scrolling down here beneath us, 941-413-8080. Or you can send us a message on bitcoinben.io. Let us know what program you're interested in, or if you want to be a part of the Private Key Capital, just let us know. But let's continue on with the news now. I got 4 more articles I want to go through. We started late, so let's just breeze on through these. So again, like I said, Tether adds $1 billion in Bitcoin to its reserves as USDT supply nears $175 billion. Blockchain data shows this, and the crypto firm behind the largest stablecoin has been accumulating Bitcoin alongside gold over the past few years. So guys, Bitcoin is a scarce asset. There is only 21 million Bitcoin. It is hard capped at that. There will be no more after that. And everyone is going up. So we are going to experience a supply crunch at one point in history and one point in time. How soon can it be? I don't know, with everyone, with the rate adoptions going, it could be sooner than you may think. So just at least hold on to some Bitcoin, not others. If you're an XRP fan, because it's always one or the two, you're either just strictly all XRP or just Bitcoin. Either way, I still say you should hold some Bitcoin, whether it even just be $100, just to have some than none. Because again, we can't even fathom what the amount of Bitcoins actually want to be. $1 million, $1 billion a token out there. And at that time too, what's the inflation like for the current dollar fiat system we have? Is that $1 million equivalent to $10 today? We don't know. But again, you just want to at least have a hard asset out there, and that is Bitcoin. So if you have a full bags with XRP, what's going to hurt by putting just $100 in there? Just have it on your balance sheet, in your savings account. Again, diversify that portfolio, just even the tiniest bit, and you may do well with it. That's just my thoughts on it. Yes, I have become kind of a Bitcoin maxi since I've opened up these clubs and all, but I still do like the other coins out there. Bitcoin can't do it all. I know that. I like Theta Network for its AI sector. It's DeepIn. They started off as a virtual peer-to-peer video streaming platform with gaming. So again, I do understand that there are other tokens out there that Bitcoin just can't do that data. So if you're investing in other projects, be sure it has utility and not just a currency, because Bitcoin's got that covered. And hey, maybe even XRP does too. But let's continue on with this article. I was going off of that rant on just going, Bitcoin's scarce, it's being gobbled up. Tether, the biggest stablecoin provider by market cap, has been acquiring it for years. MicroStrategy's been acquiring it for years. Governments have been confiscating it and holding on to it for years. So just grab some and you will be good. But let's hear about this purchase. So Tether, the crypto firm behind USDT stablecoin, has added about $1 billion worth of Bitcoin to its reserves, bringing its total holdings to $9.7 billion as the supply of its flagship stablecoin rose to nearly $175 billion. Now, blockchain data by Arkham Intelligence shows that the address tagged as Tether's Bitcoin reserves received 8,889 Bitcoin from a wallet of Bitfinex. Now, the crypto exchange closely associated with Tether, the address currently holds $9.7 billion in Bitcoin based on the current price of about $113,000 per Arkham's data. Now, can I delete this? Now, here is the Tether wallet that we see on chain. So you can view this on chain. Where is the wallet address? I'm pretty sure this article probably gives this to us, but if you have the address, you can just click on it, post it in BTC Explorer, and you can see the transactions that happen with the wallet. But the latest maneuver fits into a pattern of Tether accumulating the largest cryptocurrency alongside with gold, adding to its Bitcoin stash at the end of the quarter. Now, similar transactions happened at the end of March, December, and last September, and Arkham data does show this. In June, the firm seeded more than $1.4 billion in Bitcoin to 21 Capital, the Bitcoin treasury firm led by Strike CEO Jack Mallers, with Tether being a lead investor. Now, blockchain data showed with Tether CEO Paolo Duano dismissing the rumors of selling Bitcoin for gold. Now, Tether has reported 8.9 billion in Bitcoin reserves as of the end of June, according to its second quarter attestation, with the next report expected in late October with its updated Bitcoin holdings. So as right now, we know that they have 8.9, but we can speculate that they have purchased at least $9 billion worth of Bitcoin. Now, in the meantime, Tether's USD token has swelled to a $174.6 billion supply. Now, that's up 10% through the last quarter, and CoinGecko data shows this. Now, continuing to dominate among the red-hot stablecoin sector, the firm, which previously focused its effort to serve emerging markets where US dollars access is limited, formally entered the US domestic market. Now, by establishing a local branch led by the former White House crypto advisor Bo Hines, and developing a separate stablecoin dubbed USAT under federal regulatory guidelines. Now, Gate rolls out the token launch Gate Fund on a new layer. Now, that's another article. Don't want to cover that. We don't have time for that because, wait, what is Gate again? Gate rolls out which blockchain? Gate layer 1. So I don't even know what that coin is, but sometimes I hate when these articles just roll right into the next one. But yeah, no, so Tether's buying more Bitcoin. They're adding to their balance sheet. So again, that's just less Bitcoin you can get. And everyone always seems to mention too, there is at least 69 million millionaires out there in the world and there's only 21 million Bitcoin. once they realize start adding to their portfolio, there's not enough for every millionaire out there or person to hold one whole Bitcoin. So, yep, it's a scarce asset, guys. Now, let's see. I have some other stable coins for you. Let's see. Stablecoin news for you. Looks like USDC issuer partners with the Deutsche Börse for Europe stablecoin adoption. So, for the second largest market cap stablecoin out there, USDC is making some partnerships. The collaboration targets Circle's euro-pegged EURC token and USDC stablecoin, with an initial focus on trading on Deutsche Börse's 3DX. Now, German securities marketplace Deutsche Börse has partnered with USDC stablecoin issuer Circle to collaborate on stablecoin adoption in Europe. Now, Deutsche Börse Group and Circle's Internet Group have signaled a memorandum of understanding to integrate Circle's stablecoin within Deutsche Börse's financial market infrastructure, according to a joint announcement on Tuesday. Now, the collaboration targets Circle's euro-pegged stablecoin as well as its dollar-pegged stablecoin, with an initial focus on listing and trading on 360T's digital exchange 3DX and via crypto finance, both part of Deutsche Börse. Now, the announcement comes amid reports that the European authorities are considering a ban on multi-issuer stablecoins, raising questions about the potential impact on companies like Circle and Paxos. Now, collaborations enabled by the MICA. So, according to the announcement, Circle's Deutsche Börse collaboration is enabled by the European Union's Market and Crypto Assets Regulation, or the MIC framework, which entered into full force in late 2024. Now, Circle became the first global stablecoin issuer to comply with the MICA rules, and its co-founder and CEO, Jeremy Allaire, announced in July 2024. We are collaborating with the International Exchange Organization and market infrastructure provider with plans to expand the use of USDC and EURC across European capital markets. Again, this initiative between a leading European market infrastructure provider and a global stablecoin issuer marks a milestone for regulated digital finance in Europe. Now, he said also that we're planning to advance the use of regulated stablecoins across Europe's market infrastructure, reducing settlement risks, lowering costs, and improve efficiency for banks. Now, asset managers and the wider market Allaire said in an announcement, adding that as clear rules take hold across Europe, aligning our regulated stablecoins, the EURC and the USDC, with trusted venues will unlock new products and streamline workflows across trading settlements and custody. In addition to trading on Deutsche Börse's 3DX, the partnership aims to enable custody through Deutsche Börse's post-trade business Clearstream, leveraging the German entity Crypto Finance as a sub-custodian. Now, the multi-issuance stablecoin ban, what is it about? What's going on over there? So, Circle's partnership with Deutsche Börse came amid Bloomberg's reporting on European authorities considering a ban on multi-issuance stablecoins, or tokens issued in Europe and overseas under a single brand. Now, citing sources familiar with the matter, the report suggests that the European Systematic Risk Board, a European central bank-linked body for macro-prudential oversight, passed a recommendation to ban multi-issue stablecoins last week. So this is recent news. Now, the ESRB guidance, which it was approved by the higher-powered Board of Central Bank Governors and the EU officials, is not legally binding, and the report said that, adding that it would still add pressure to authorities to implement restrictions. Now, although European authorities have not issued any formal statements about the multi-issuance ban, a senior Bank of Italy official argued last week that the stablecoin multi-issuance poses multiple risks to the EU, including legal, operational, liquidity issues, and more. Now, Tether's reason to refuse to comply, while Circle managed to comply with the MICA, Tether, the issuer of the USDT stablecoin, the world's largest stablecoin by market cap, explicitly refused to comply with the framework, citing local reserve requirements. Now, local companies have been rushing to adopt stablecoins, as some officials admitted that the MICA had limited impact on the adoption of compliant stablecoins in Europe as of May 2025. But on Tuesday, Société Générale Forge, the crypto arm of the French Société Générale, announced that the deployment of its USD Coinvertible and its EUR Coinvertible stablecoin on the decentralized financial protocol Morpho and Uniswap. So, yeah, where did this article go? So it was saying, like, what was going on with there's been there's no official issuance on the stablecoin ban, but there has been talks about it saying that's like, yeah, bad. There could be some legal problems to it. And I think I did cover that article about the multi-coin ban going, Europe's just going through some longer stagflation? No, limitations. What's that thing? They're stifling innovation. That's what I'm trying to think of. Because again, with those bans and everything, it's like you're not progressing the innovation at all. Like if anything, you're holding it back. Sure, you want the little people to comply with your rules and everything, but there's a bigger picture out there of everyone using it more than the control they need with it. But that's our stablecoin news for you. We have Tether adding more Bitcoin to their balance sheets, and USDC issuer have this partnership with Bourse to just focus on trading with this exchange with a EURC stablecoin as well as USDC. Now, we talked about the ZK rollups and everything and its adoption going on. It's like, what even is that? How does that even work? So this next article is probably going to be a little boring because it's more technical about this technology that everyone's actually taking advantage of. Now, the new ZK Verify Layer 1 blockchain wants to speed up and lower cost of crypto ZK proofs. So ZK Verify, a dedicated Layer 1 blockchain for zero-knowledge proof verification, launches to remove the economic and technical barriers that ZK adoption is facing. Now, Horizon Labs, a zero-knowledge cryptography platform, is rolling out its dedicated Layer 1 blockchain for private data verification. Now, ZK Verify, a new Layer 1 blockchain designed for the zero-knowledge proof verification, announced its mainnet launch on Tuesday. Now, ZK Verify's mission is to remove the economic and technical barriers to ZK's adoption. Horizon Labs CEO of ZK Verify founder Rob Vigilone told Cointelegraph that even though verification is typically seen as the cheapest part of the ZK value chain, it is still far too costly and inefficient to support real-world skill, Vigilone said. I cannot say his last name. But what is ZKP verification? Like, that's like we're saying it a lot. We see it in articles a lot. What is it? ZKP verification is a cryptographic method that allows one party to prove a statement to another without disclosing the underlying information or data itself. So a common example is to verify age eligibility to access service without requiring disclosure of an entire ID or other personal details. So how can we do that without actually disclosing it? Well, with the ZKP volume estimated around 100 million or 44 billion proofs as of 2025, ZK proving market is expected to reach 1.5 billion by 2030. Now that's just more data. It didn't really say like how does that work. So let's say I got data, my vape, I got data. So let's see, this was using the ID. So without requiring my ID, I'm still holding on my ID. And this platform, this website over here is trying to prove or verify I'm of age. So how do we get this data over here? Well, it's kind of like a backdoor, which is still approving all the information without disclosing the full information to the final party. So that's kind of how I kind of saw it. It's like kind of loops around, like the door's right in front of you. If you open it up, like there's all the information, it's proven it works. But like this method kind of like goes around it. So you're not just opening up the door, but you're still giving the information to approve it. So yeah, this is kind of hard to explain there too, even with that. But the ZK roll technology is pretty big in the blockchain space, and just to actually just help. But again, with the ZK volume estimated around 100 million and 4.4 billion proofs as of 2025, the ZK proving market is expected to reach 1.5 billion by 2030, according to data from leading industry platforms like Chorus, aligned with Horizon Labs. Now, here is the market set to exceed at least $1 billion by 2030. So in 2025, the market cap is like about 97 million. 2028, we could see it increase to 1.5 billion. While 2030, we're in the 1.3 billion to 10.2 billion dollars ratio. Now, right now, many chains and apps can be slowed down or more expensive because verifying those proofs on Ethereum or another chain can be significantly more expensive, Vigilone said. Now, according to the ZK Verify or the ZKP verification on networks like Ethereum can cost up to $60 per proof during high congestion. Now, with verification consuming up to 300,000 gas units, ZK Verify promises to enable cost reduction of at least 90% compared to verifying directly on the layer 1. Now, heavy math instead of original app or chain. So to cut verification costs, ZK Verify provides a dedicated verification layer by separating proof of verification from settlements on layer 1s. Now, ZK Verify checks a ZK proof by doing the heavy math instead of the original app or chain. Vigilone told Cointelegraph, adding that the original chain sends proofs and inputs, it routes to the right checker, it validates them, and then records a pass or fail. Other apps or chains then read that result instead of redoing the math. Now, offloading this computational burden to ZK Verify, cutting time and costs. So decentralized IDs, gaming, DeFi lending are among the use cases that we will be using this technology. So among real ZK Verify use cases, Vig alone mentioned that the decentralized ID, verified trading predictions, decentralized financial lending, gaming, and more. The easiest way to interact with ZK Verify is just via our relayer interface, which is easy as an API to use and constantly growing in capabilities, he said. Now, adding that blockchain works quietly in the background, so the user should not need to actually think about how it works. He also highlighted ZK's Verify's capability to verify many different proof types with its modular architects, as well as multi-chain optionality, enabling teams to verify once in a test to Ethereum, Base, Arbitron, Optimism, and other chains without the lock-ins. Now, ZK Verify's mainnet launch comes months after Ethereum Foundation announced plans to integrate its ZK Ethereum virtual machine directly into its Layer 1 blockchains within a year. Now, the planned integration would bring significant changes to ZK EVM's block execution, letting validators verify multiple proofs from different ZK VMs instead of just re-executing blocks in the transaction. So this could be pretty big news right there. But again, ZK proofs can be a cheaper way than verifying information than the traditional one. Because they were saying, if you're trying to verify information on Ethereum's blockchain, that could cost like $60 with redoing the math and everything. But with this will cost it cheaper, and you still get the same end result. So again, if you want to dive deeper into doing ZK proofs and rollups, I would recommend you look into that, because that could be a class that we teach here, if anything. And now, lastly in the news, we have some Cronos news for you. Let's see. Cronos partners with Amazon's AWS to boost institutional tokenization and real-world asset adoption. Now, Cronos is the native token to Crypto.com, and I always like seeing some altcoin news out there. Now, Cronos entered into a strategic agreement with AWS, which could provide strong support for builders while opening the door to potential financial benefits. Now, less than a year ago, the blockchain protocol struck a similar deal with Google Cloud. Now, the terms of this deal, according to the document shared with Crypto Potato, the leading blockchain protocol, Cronos shook hands with Amazon Cloud's computing platform, AWS, to provide developers with easier access to its AI tools and infrastructure. Maybe they should have partnered with Theta Network. But through this collaboration with AWS, Cronos is working on ways to make Cronos data available via the AWS public blockchain data. Now, the intention is to build a trusted and reporting-ready pipeline that could support AI agents with analytics and complex queries, while offering financial institutions a pathway to simplify workflows through reporting templates, the announcement reads. Now, additionally, AWS will provide selected Cronos developers with up to $100,000 in AWS credits per the startup, and the funding is supposed to help early-stage products scale DeFi protocols, real-world asset platforms, and AI-powered applications built on Cronos. Now, speaking on the partnership with Mirko Zhao, head of Cronos Labs, who believes the next growth cycle will be defined by tokenization and real-world assets, he assured that his entity has the foundation to support the development, while collaborations with AWS extends its capabilities. For the part, a representative from Amazon Web Service said that financial institutions require robust, secure, and compliant technology solutions as they explore innovative approaches to asset tokenization. Now, by leveraging AWS's robust security controls and compliance frameworks alongside Cronos's blockchain technology, we're enabling both innovative startups and established institutions to build tokenized solutions that meet the highest standards of security and regulatory requirements. Now, we're excited to support Cronos's vision for institutional-grade tokenization while ensuring enterprise-grade security and compliance. Now, the deal comes shortly after Cronos unveiled the 2025-2026 roadmap, which outlines a strategy to strengthen the entity's position as a choice for institutions. Now, the core objective of the initiative includes distributing DeFi services to more than 150 million users via the exchange Crypto.com and increasing demand for the CRO token through ETFs and Trezor integration. Now, the previous similar partnership toward the end of last year, Cronos Labs teamed up with Google Cloud, another cloud computing provider. The collaboration is designed to strengthen Cronos' accelerator program, driving growth and innovation across its ecosystem. Now, according to the terms of the agreement, Google Cloud joined Kronos 32 validators on the network's Ethereum virtual machine protocol, supporting startups in the Kronos Labs accelerator and fueling broader development engagement. Now, Ken Timsit, Kronos Labs managing director, said at the time that first, it enhances the security and reliability of the whole network, and second, it makes the Kronos Accelerator program even more appealing to startups. Finally, it opens the door to the creation of a new generation of innovation and decentralized applications using Google Cloud's data processing, computing, and AI capabilities. So 2 great partnerships CRO has done so far, one with Amazon Web's AWS service, and as well as Google's cloud products as well. So yeah, and Kronos and Crypto.com did do a partnership with President Trump as well, so with World Liberty Finance. So lots of stuff has actually come from Kronos. Now, with the exchange Crypto.com, it's not my favorite one to use. I'm just giving my little tidbits of information. Why do I not like to use it? It's not as easy compared to Coinbase, Uphold, and some of the other ones out there. It's more on the same par as Kraken, Bybit, BitTrue, just in the way of like when you want to send in transactions. I just do not like the fact that you need 2FA security codes or passwords to be able to move it over. And usually you only given 30 seconds to do it too. So a lot of people I've helped out, like they don't have the speed to do it. It's like, okay, I got my text code, copy, paste. Oh, now I need my Google Authenticator code. Go there. Oh, dang, I'm out of time. So I just don't like that aspect. You got to be fast with it. Nothing wrong with Crypto.com at all. They even have some cool cards out there to let you earn crypto, CRO tokens. I think they just released a XRP card, unless that's Gemini. But no, so I have nothing wrong with Crypto.com. It's just, it's not my favorite exchange to use. But Kronos, yeah, but that token-wise outside of the exchange, yeah, it's getting some bullish news out there lately. Now, that is it, though, for all the news. Joe from California, welcome to the show. Thank you for being here. But that is it for the news I have for you. Bitcoin, well, it looks like we're dipping close to 113. We touched 114 literally yesterday. That was some nice time. Whoa. Oh, I'm at the month-long chart. I was like, wait a minute, when did we reach 117? No, but at one point yesterday, we were touching 114. We held steady, but now it looks like we're just experiencing a $1,000 dip right now, but that's okay. So it was nothing to fear. So hopefully you guys bought the dip. Whenever this happens, take advantage of it, because everyone around the world and the big guys on top are calling for $1 million Bitcoin. It's not going to happen overnight, though. It's not going to happen next year. Maybe it could, but it's not really going to happen to. But it is going to hit there at one point in time, probably a lot sooner than you think. So just get some Bitcoin. If you need help, join the club. We're here to help you guys out. We have classes to help teach you about this and everything. And again, just thank you for following the show to stay up to date on what's happening in the crypto news sector, because this is how we learn and stay up to date with our investments and just what's going on with the technology. We use it every day. So if there's an improvement happening, I like to know about it. So thank you everyone for being here. I will be back tomorrow at noon, normal time for the show. I don't have any meetings going on during that time. So that's when I will see you then with some more crypto news. So peace out, guys. I love you. Take care, and I'll see you tomorrow.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.